Hello, hello, hello. So I hope you guys are doing good. Today we're going to be looking at TransMedics Group, which is a company that I do not own, but I just recently discovered it, and it looks very interesting. So we're also going to talk about AMD, which I have two shares in, and I'm looking to possibly increase my position size in that company. So yeah, let's just get started. If you do like the video, please like and subscribe. It helps me out very much, so thank you so much for that. Yeah, let's get started. So I recently just learned about this company, TransMedics Group. Just wanted to show you, it's a really interesting company that has a lot of benefits to humanity. It's got a very interesting logo. I don't know if it reminds you guys of something, but anyways. So what TransMedics Group does is they basically help preserve organs to be used in surgery, and they do this without freezing the organs. They do this by maintaining a stable environment for the organ that's very similar to body conditions. And this helps improve patient outcomes and also just the longevity of the organ itself. So currently they do transport lungs, hearts, and livers. It's a very impactful company that I think will benefit a lot of patients, a lot of individuals. So currently they do most of their business in the US, but I believe they are increasing their share overseas. So yeah, you can see that they have different methods of transportation. They use air and ground travel. So currently they are valued at 2.58 billion US dollars, and their projected revenue growth and EPS growth is very, very good. They did have a recent quarter that didn't have very good earnings, and this caused the stock to drop very, very dramatically, more than 50% drop. And we can see it's a very high growth stock. I think one thing that the company is going through now is a lot of dilution. So I did read that they diluted about 9 to 10% of shares. So we can see that their annual revenue has been increasing very dramatically. And the reason for the recent sell-off is because of this third quarter poor performance. This is a company that I'm going to be watching and probably nibbling on a little bit, just adding a few shares here and there if we do see some more downward momentum. So all the way down here we have AMD, which I have two shares of that I bought all the way back in 2022, 2 years ago, more than 2 years ago at this point. I'm not very invested in the whole semiconductor industry. The most is I have exposure in the QQQs, right? But other than that, I don't really have that much share in this industry. And the thing is, AMD is looking like it is a good buy for the long term. I think that from how they're guiding, it seems like things have slowed down a little bit, but soon it will pick up very, very nicely in the near term. So obviously gaming is down. The thing is, it's not surprising because people aren't really upgrading their PCs now, and in terms of the console cycle, PlayStation hasn't made the PlayStation 6 yet, so there's still some time there. So overall, AMD is looking like a good buy, and I definitely can see it performing nicely within the next decade or so. I just don't want to be too overextended into the semiconductor industry. I think that they've run a lot. They're definitely projected to do well, that's for sure. But I think that if there's any cutback with spending in the AI-related industries, with any of the Magnificent Seven or anything like that, then these semis will be hit pretty hard. So at this point, I'm just going to buy a little bit into it, see how it goes. But yeah. So I'm very, very invested in HITI. I think that in my base case scenario for the next 5 to 10 years, this stock will 2x. And in my bull case scenario, it's going to be 10x for this stock. Two very surprising stocks for me in my portfolio is Celsius and HIMS. I didn't expect them to recover this quickly. I was expecting more downside so that I could pick up shares for cheaper, but turns out that they're just gonna come back right back up. I did buy some of the dip, but overall, I didn't put in that much for these two companies. I think that Celsius may have found a bottom. It may have, but we'll have to see going into year end. Celsius was definitely undervalued at $25. Anything under $30 I think is pretty decent value for this growth company. HIMS, on the other hand, Amazon just seems like it was a nothing burger for this company. I mean, most investors who follow this company knew what Amazon was going to do. They knew that Amazon wanted to tap into this healthcare industry. I think the thing you have to remember is Amazon doesn't always surpass expectations. What I mean is, yes, they're doing very good with their e-commerce. They're doing very good with all of those things that they excel at, AWS, all that. But when it comes to these secondary objectives for them, like music streaming, movie streaming, Prime Video, everything that they have there, it's lagging the leaders in the market. And it seems like HIMS is putting up very good numbers. They're just continuing to perform very well. And I don't see Amazon really taking that much market share from HIMS' existing market share. They are both fighting for that total addressable market, but it seems like HIMS has a very solid footing already. And many people are already pretty loyal to HIMS, but I will say that this stock price has been very surprising. I mean, it's not surprising if you know how volatile this stock is, but I just thought that I didn't think it would rebound all the way to $30 this quickly. It's been super quick. It's only a few days, up and down, and we're back to $30. So in that way, it's very, very surprising. I did add a little bit more of LEC, Lithium Americas Corp. I think that with the overall trend, the recent slump in the EV market is temporary, and with the new administration coming in, LEC is going to do very, very well within the next 5 years. With ASTS, I'm expecting that the price is going to be very muted for a long time, because the thing is, within the next year, it's just going to be them consistently sending up satellites. And that's basically all of the news you're going to hear. It's just going to be increasing their number of satellites little by little every single quarter. There might be some news here like, oh, they're testing, they're doing some beta testing, all that stuff. But overall, it's going to be very muted because of how much short interest there is on this stock. And we're going to see this continue for quite a long time until their services are going to be fully realized, especially in the US, Europe, and Japan. So this is just something to keep in mind with this stock. It's going to look like a very good accumulation stock for the next year or maybe 2 years, and we'll just have to see how things go. I really like how my stocks are set up. I like the optimism in these small caps, and they are primed very well to perform for the next decade plus. For high tide, we'll really have to see. If everything stays stable and they just continue performing extremely well in Canada, it's an easy 2x from here. However, if they're able to come into the US market because of federal legalization or something monumental like that, and they get into Germany, they improve on their e-commerce side, this is easily a 10x stock. If they can get into those two countries, upgrade their e-commerce side, really grow revenues on that side, that's going to unlock margins for them. It's just going to be a really great opportunity for them. If that happens, I can see 10x easily for this stock. Yeah, hope you guys learned something new today. Agree with me, disagree? Let me know. What do you guys think about AMD, TransMedics stock? Do you guys hold it? Let me know all your thoughts in the comments, and like and subscribe, and I'll see you guys next time. Bye.